stocks are pushing to close off the lows, but it's still bad when that means we're down over 6%, even with the last 30 minutes of gains. Scott Bauer is the CEO of Prosper Trading Academy, joining me from the floor of the CME. Scott, it's an ugly Friday for U.S. stocks, and the only safety trade that's working real well, it's bonds, baby. So is this the only game left in town?
Hey there, Oliver. How are you too? Gotta, I guess, laugh a little bit with what's going on today. Is it the only safety trade? I mean, we had this discussion, I think it was 1 week ago, maybe even 6 days ago, about the U.S. dollar and the potential flip-flop. Yes. Right? About if this exact situation happens here. So you look at the currency market, especially, and I'll come back to bonds and gold in a moment here. But right now, the currency safe haven trade is the yen. Maybe the Swiss franc a little bit, but we had this discussion how we might start seeing some of these other currencies start flip-flopping, and kind of standing on their head a little bit. And that's what's unraveling today. Now, in terms of the bond market, is that the safe haven trade? It certainly has been. I think we're at the end of the rope. And everyone's going to say, Scott, you're crazy. How can you say that? The Fed's cutting again. They're cutting another 50, 75 basis points, another point. I think we're at the end of the rope. I don't mean that we can't see the 10-year get down to 20 or 25 from where it is right now.
Isn't there like a magnet on zero?
Yeah, I mean, there certainly is. But what I think that investors need to really look at is if you have been in that space, if you have been one of those people that have ridden the train, okay, the train's pulling into the station, time to look elsewhere.
Scott, the bond rally, of course, anytime it looks like it's approaching its demise, it just tears someone else's scalp off of the investor, record books, right? There's so many folks that have lost trying to bet against bonds. But what we do have this time is the ferocity and speed of the bond move that does look like it's unsustainable. But then there's a lot of calls right now, Scott, for this to not just be about, the coronavirus scare, but that this is finally, after 11 years, this whole cascade of leverage and, Fed supporting markets coming to an end that, hey, get ready because you may not get yield, but you're going to get price appreciation on bonds. I mean, do you have to have an inherently optimistic view to want to short bonds? I mean, do you have to be like crazily out of consensus optimistic right now?
I'm not saying short bonds. I'm saying if you've been long them this whole time, start covering those positions.
Right.
That's what I'm saying. I'm not in the camp of shorting bonds here, but you're right. You make some great points, especially with the Fed. The thing that we've focused in on for years now is the Fed put, the Fed backstop. That put is running out here, right? So we've got to get to a point where the market, the overall market, whether it's the equity space, the bond space, whatever it is, has to get back to some sort of normalcy. I think we're going to get there sooner than many people think that we really are, because so many people just are inundated with this state of panic. And this will pass. It won't pass without pain. It won't pass without many people, many firms getting blown out of the water, unfortunately, but this will pass too.
Yeah. Scott, we're also seeing gold has started to not exactly struggle. I mean, it's at 7-year highs, but it has was pretty quick to fade on a few decent moves last week. Right now, it's basically flat on the day. And then if you want to talk some Bitcoin before we let you go, I mean, look, BTC, I think that its store value use case is everything but dead.
Where do you want me to start?
Yeah.
First, let's talk about gold, actually.
Yeah.
And the reason I think we're not seeing gold take off from here, there's lots of rhetoric about this, but people are using that as part of their margin calls or to take profits there to cover elsewhere. So I think that if we see a continued sell-off, if we see continued volatility here, I do believe we will get a rally in gold. Now, to the Bitcoin case, you know what? All bets are off. And how often do we have this conversation about, is it a store of value? What is the relationship with gold? What is the relationship to being a safe haven asset? And it is completely thrown out the window now. Again, I'm not saying shorted here, but man, oh man, did this break down some of the basic underlying tenets of cryptocurrency and Bitcoin.
It's a brutal day for it, as I've said here. The coverage of it and how to prioritize it, I think, has dropped in a big way, because not only is the bull case for it as a store of value taking a major hit, this is in a time where correlations are finally breaking, right? We had so many correlations across markets being together. It was just hard to know what was with what, but now you've got bonds and gold way in a different direction than risk assets like crude and stocks, and clearly Bitcoin has chosen a side. Even though it doesn't move in big ways, 15% is nothing to bat an eye at.
15% is a really big move. And look at the volume, the CME volume, futures volume today is almost 10,000 contracts. Not, over the top. However, for the last week or two, it's been, more like 2,000, 2,500 contracts, kind of complacent. And now you're seeing, with some veracity, those sellers coming in. And again, I don't look at this as much of a panic sale in Bitcoin as I do what's going on in the equity markets. I look at it as maybe the people are really now saying, this ain't what it's cracked up to be.
Yeah, exactly. Great. Very well said, Scott. Nice work here, C-Means. For the record,
thank you.
Mr. Bauer always doubted the store value use case. Kudos to you, Scott. All right, we'll be right back. CEO of Prosper Trading Academy at CME. Thank you, Mr. Scott.